Greetings and good day, I hope you're doing great. I'm here with you for the daily analysis of silver on March 11th. As we saw last week, after the outbreak of war between Iran and the United States, contrary to expectations, silver experienced a
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
price drop and ultimately ended last week with nearly a 10% decline. However, with the start of this week, the price has been fluctuating between $79.60 and around $90 and is currently trading at about $86.60. By examining the daily time frame, we can observe that on the first trading day after the start of the war, we initially saw a price increase and its reaction to the daily BPR zone. The price rose up to $96.40, and then from this area, the price decline began. Meanwhile, many traders with the escalation of military tensions expected gold and silver, as safe haven assets, to become the destination for many investors and for us to witness a price increase in these assets. But contrary to expectations, the price dropped sharply, and after filling the daily FPG, it reacted to the $78 level. Afterwards, we saw that the price fluctuated within a range, and after the start of this week, the price of silver increased and broke out of this range to the upside. As you can see, on the daily candle, we are witnessing the price reacting to the daily FPG zone. We are currently analyzing the 4-hour time frame. After the heavy drop that occurred at the beginning of February, we saw that silver received good support around the price level of $70. During this decline, after the price engaged with the 4-hour order wall zone, it reacted within one candle to the daily and 4-hour FPG around the price level of $64.50 and then rebounded upwards from this area. And now, at present, we consider the main support level for silver.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
To be the $70 range. If this support is lost, we might see a further decline in the price of silver. In this time frame, we can clearly see that the price increase we witnessed at the beginning of last week and on the second day of March continued until the 4-hour FPG was filled, reaching the price of $96.50, and then the price turned downward. In this way, we consider this area, that is, the previous high, as the most important resistance ahead of the price, and if we see this barrier broken to the upside, we can expect the price to rise up to the 4-hour unicorn area, reaching $104. We are currently analyzing the 1-hour time frame. Due to the recent volatile movements, the price of silver has left many liquidity gaps nearby, and considering the heightened military tensions as well as silver's sensitivity to news releases, we can see that decision-making has become somewhat more difficult for traders. Nevertheless, as we have seen since the beginning of today, the price of silver has dropped by more than 2% so far and is now trading at the edge of a low time frame FPG. In the last 5 candles, we can observe that silver has managed to keep its price above this barrier. If the price is able to collect the shared liquidity between the recent candle lows and the 1-hour FPG and then returns upward, we can expect the start of a bullish move. In this case, by placing a stop loss below the shadow candle and targeting RPR ratios of 1:1 and 1:2, we can enter a buy position. In the second scenario, if this support level is lost and a strong candle breaks through this area, we can expect the price to reach the 1-hour FPG around the price level of $85. Wishing you success and profitable trades.